Let's talk about distributed ledgers for a moment. They are causing something of a furore in the financial services industry. And I think the hype is a fair amount away from what's being delivered yet. You guys have been involved in the Hyperledger project. There's a new IBM business unit looking at the distributed ledger. How are you taking the lessons that you've learnt internally and then taking them out to the banks and financial institutions?
Well, let's start with the Hyperledger project itself. Okay. So we launched this together with 16 other firms in December last year. Mm-hmm. It was very important for us to have an open standard that we thought could be enterprise ready. And let me emphasize those words, because enterprise ready was something we felt wasn't in the marketplace to begin with.
Yeah.
Okay.
So what did we do? In February, we donated code. We established the governance mechanisms. So not only do you want an open standard, you want open governance to go with it. So that has all been put in place. Critically important to then engage more clients. So then there are over 100 institutions now working in a community to develop capabilities. So this is a model that we learned around Linux and several other open standards. Apache was also a very successful open standard. So we're taking the same approach that we know has worked in the past to apply it to the Open Hyperledger project.
And do you think it stands out from the other consortia? Because I can count 5 consortia in the blockchain world at the moment.
Well, there are separate consortia like R3, and I'm not sure which ones you're thinking of.
Sure.
I think you got to break the problem down. So the first thing you need is a fabric, a blockchain fabric, and that's really what we were talking about just now.
Hyperledger's
on top of that, you're going to want to develop services. And you asked, what are we learning as we work with clients? And I think that's a great question. So you take the building blocks of blockchain. There's really 4. First is the distributed ledger, right? Then you have the smart contracts and the rules that are around it, and those are both kind of business concepts. And then you've obviously got the privacy, and you've got the consensus building.
Yeah.
And I think we're learning things in each of those. I mean, take consensus building. In financial services, not all financial services are necessarily the same stature. So do you want every participant in an open ledger to be able to provide consensus, or do you build a 2-tier system? And I think we're concluding you probably want to have some differentiation in how consensus is achieved around whether a transaction is valid or not.
So you need consensus around the consensus. But is that tiering of firms, is that likely to generate perhaps breaking up of the distributed ledger project? I mean,
I think it's very consistent. It's no different to permissioning.
Okay.
Right. I mean, think of it in that, in those terms. So when you have permissioning, you're enabling certain counterparties to only see information relative to their transactions, right? That doesn't mean you have now multiple ledgers. It's just a thought process around how the permissioning works. Exactly the same concept on the consensus. So there's only one algorithm essentially for consensus. Once that agreement and trust is in place and it's viewed as a valid transaction, it goes into the ledger. Everyone sees that in the ledger.
Okay. And so where do you guys think distributed ledgers are going to be implemented first? I mean, it could be trade, post-trade, it could be some element of contracts.
Yeah, I mean, I think what we're starting to see is that there is, in the immediate instance, a lot of opportunity which is, within the organisation itself.
And I think that's a really important point. And your questions about the consortia, whilst clearly of great interest, there's enormous immediate opportunity in terms of using blockchain technology within the company.
Rate and pace is interesting, right? I mean, we just finished a study. We know 15% of the financial institutions think they'll be in production next year.
Okay.
Shortly thereafter, there are going to be a lot more, so over 65% within 3 years. So we see this as a very broad-based, pervasive deployment of an approach to many, many different use cases.
And I think back to the point around consensus, I think as banks clearly take advantage of it within the organization itself, but the more rapidly that consensus is possible to be built up, you're going to get into a number of the instances that are going to require between both banking institutions and others.
Yeah.
Because what's becoming very clear is if you look at the potential for benefits, particularly to take cost out of many processes, like in the trade finance area, if you look at the amount of friction that exists in that particular process, the savings that could be achieved go into many billions.
Yeah.
So it's not only an opportunity to be able to do that in a completely different way, I think those are the sorts of ways that are also going to potentially be disrupted, because it's going to give the opportunity for other players to get into that particular marketplace, which is why I think there's going to be a real need for the banks to move quickly.
We see lots of other use cases, right?
Yes.
I mean, we've seen ledgers associated with regulatory compliance, so that banks can almost share real time with regulators what's going on in the transaction environment.
Yeah.
Take your case management example.
Case
right?
management
Yes.
example,
Yeah.
The announcements you've done with CLS,
Exactly.
Bank of Tokyo Mitsubishi, smarter contracts. I mean, there's many interesting use cases out there.
Well, I think while they're interesting, if you take money out of a system, that's money that somebody was earning. Let's take the example of T2S, Target 2 for Securities. Great idea for efficiency in settlement in Europe. Its first concept was around 2001. It's going to complete in 2017. So you could have conceived, given birth to and grown a human being and put them through most of the way through secondary education by the time it's taken to build an efficient settlement system in Europe. That's quite a long time. And that suggests there might be some people who are fighting the efficiency gains there. Do you not think that those conflicts of interest where people they don't want to gain efficiency because it's their money, are they not going to perhaps slow the process?
I think you have to separate out the fee income, which has always been under pressure recently, and the expenses associated with generating those fees.
Okay.
Right. So the key here is to have obviously very low marginal costs, approaching zero essentially for transactions of any type.
Yeah.
So think of this about it's really about having no friction in the system.
Exactly.
That is an improvement for everyone. It's an improvement for the participants.
Yeah.
It's an improvement for the intermediaries, and it's an improvement for the regulators because it takes risk out of the system.
And a lot of this is going to be customer driven as well. I mean, if you draw an analogy with what's happening in the payments business, particularly around the consumer payment side, with things like real-time payments coming into being, the margins that the banks are actually making in that space are getting more and more squeezed.
Yeah.
So there is a real need to be innovative. There's a real need to look at other ways in which you can actually make up for those particular margins.
Yeah,
So there's going to be
and
a
we don't think
relative-
blockchain's for everything either, right? I mean, there are some, high frequency trading's probably not going to be taken into a distributed ledger soon. Who knows in the future? But chances are you'll start somewhere else.
Yeah.
Where you're starting, we're seeing is settlements in credit default swaps, for example. So these are very complex transactions. They're not necessarily high frequency. It's important to have a distributed ledger because you want agreement around all the terms in the contract. Within IBM, we were the first to launch a in-production Hyperledger environment. We used it in our financing division. And the specific use case was around improving the efficiency on disputes.